This video breaks down why I believe we are in a bubble. They keep telling you people are struggling, and yes, some absolutely are, but at the same time, there is still way too much money moving through the economy. Because if people were truly tapped out across the board, you would not still see this many people buying non-essentials, speculating on assets, stretching for investment properties, and jumping into debt just to stay in the game. That is the key difference. A lot of people are not broke in the way they think they are. They are just trapped by the biggest financial commitment they ever made, the mortgage, because when house prices rise, everything around them rises too. Electricity, water, insurance, rates, interest. The whole cost of life gets dragged higher with it, and suddenly people realize they did not just buy a house. They bought a lifetime of repayments attached to an inflated asset. That is what happens when too much money and too much debt enter the system at once. This is not just about housing, it is about access to leverage, access to brokers, access to refinancing, access to more debt for people already in debt. The system keeps finding ways to extend people further, and for a while. That makes everything look strong. Prices keep rising, buyers keep chasing, investors feel smart, homeowners feel richer. But leverage works both ways. The housing market can look healthy right up until the turning point, and that turning point usually closes in from all sides. Borrowing power tightens, costs stay high, employment weakens, confidence slips, and then supply starts rising right as demand loses strength. That is when the people who understand cycles move first. A lot of people think wealthy investors are rich because they buy property, but the real reason is they understand timing. They usually start with one solid asset. They build equity, they increase income somewhere else, they reduce risk, and only then do they leverage harder. They do not go all in at maximum risk unless they know exactly what cycle they are in. That is why so many everyday buyers get trapped. They buy the dream at the top, using debt they can barely handle, hoping prices keep rising forever. But experienced investors know something most people ignore. If your asset has already gone up hard, someone has to be the exit liquidity. And when enough investors decide they have made their money, they sell into strength. That is where the snowball begins. New buyers come in later, with less borrowing power, higher living costs, and weaker buffers. Supply builds, prices flatten, sentiment shifts, and then people finally realize demand alone does not hold a market up. Debt does, until it does not. That is the part people do not want to hear. Yes, housing will likely hold value over the very long term. Yes, people will always need somewhere to live. Yes, demand will always exist, but living through a downturn is very different from talking about one, especially if you bought late. Especially if you over-leveraged, especially if your income gets hit at the same time the market softens. That is why I think we are in a bubble. Not because everything crashes tomorrow, not because property becomes worthless, but because too much easy money, too much leverage, and too much belief in permanent growth eventually creates a market that cannot keep outrunning reality. And when reality catches up, it happens faster than most people expect. The smart do not chase strength. They wait for fear. Be fearful when others are greedy, and greedy when others are fearful. Ask yourself this: why do the wealthy invest the way they do? Because they understand cycles, they understand risk, and most importantly, they understand that the real money is not made by buying when everyone feels safe. It is made by buying when everyone else is too scared to move.